Thank you everyone for joining our self-directed IRA and Solo 401k live Q&A session. I'm Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. Today, Dmitriy will be answering the questions. Dmitriy is the founder and president of Sense Financial Services. He began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and is a licensed California real estate broker. Dmitriy holds a designation of Certified IRA Services Professional from the American Bankers Association. Over the years, he's taught hundreds of investment and financial planning seminars and also has mentored thousands of investors. Welcome, Dmitriy. Thank you for taking time to answer all the questions today.
Sure, Natalie. Glad to be here with you. Thanks for hosting it, and looking forward to the questions.
All right, we'll jump right in. First question we have is from Shahid, and he's asking, can I use my self-directed IRA for real estate investing?
You absolutely can use your self-directed IRA for real estate investing. In fact, real estate is probably one of the most common investments that many of our clients invest in. In fact, with the self-directed IRA, you can invest in virtually anything with just a couple of limitations. You cannot invest in collectibles and life insurance, and you cannot invest in any transaction that is involved a disqualified person, which is yourself and your immediate family members. But other than that, the sky is the limit. And certainly real estate is very common. Many of our clients invest in real estate. You can buy with cash. You can also use leverage. If you use leverage, you do need to get a non-recourse loan, which most banks will not help you. But you need to work with a specific lender. Again, the key here, the loan must be non-recourse, because as a disqualified person, you're not allowed to provide a personal guarantee. Other than that, real estate is a great way to build wealth in a tax-deferred or possibly tax-free environment if you're using Roth.
Okay, a question from Diraj. Can you explain the process of converting to Roth IRA?
Well, the process of converting to a Roth IRA is that you basically need to contact a custodian, and custodian will help you with that. So you submit a Roth IRA conversion form. The conversion amount becomes a taxable event, and that amount is going to be taxable amount that your IRA custodian will issue Form 1099-R. You'll get that typically in January. You give that to your CPA, and then your CPA will include that in your tax filing. Again, you have to pay the taxes and the conversion amount, but it is pretty straightforward. It's handled by the custodian. So talk to your IRA custodian. Now, since most of you here are probably clients or potential clients, and we're talking about self-directed retirement accounts. If you're thinking about converting self-directed traditional IRA with some assets into Roth IRA, that can be a bit more trickier, because you have alternative assets in there. They have to be valued. And so it's still possible, but it can be a little bit more tricky. If that is the case, reach out. Let's have a call. Let's have a talk and see what's in there. I think it can be a great way, because depending on the assets that are in your self-directed IRA, actually, I've done it myself. A number of my clients did this. You can convert, and you can actually convert at a discount, because if you convert a promissory note, for example, you can get the valuation which is below its value. I've seen sometimes 70% discount if the note is possibly defaulted. So It can be a great tax strategy, but needs planning. So be sure to do that.
Okay, a question from Victor. I have a Roth Solo 401k, but I have sold my real estate investments and no longer have a business. I am 65 and want to know whether I can still leave my Roth Solo 401k invested in stocks or whether I need to roll it into my Roth IRA.
Good question, Victor. I think the gist of this question, the summary is that you are no longer have a business. So if that is the case, then you need to do something because solo 401k is considered employer sponsor plan. There has to be a sponsor. So if your business is no longer there, then there is no more sponsor. And 401k plan cannot exist on its own. It needs to have a sponsor. So if you're no longer in the business, if there is a possibility for you to maybe start some sort of self-employment activity, then you can keep the plan. You can do a number of things. It can be nominal, doesn't have to be a full-blown, full-time business with the entity. Just being a sole proprietor. Sole proprietor can sponsor a 401k. But if there is no self-employment activity or business activity at all, then plan will need to be terminated. And then you can move everything over to, in your case, Roth IRA. Again, if you don't have any alternative investments, that's going to be easy. You can just move cash to just a conventional Roth IRA. But those will be the steps.
Okay, next question is from Jonathan. What is the deadline for sole proprietors for voluntary after-tax contributions to a solo 401k? Is October 15th the extension filed?
If the
The deadline?
extension filed, yeah. So
Yeah.
if you are a sole proprietor, then both the elective deferrals and profit sharing contributions, the deadline is up until tax filing plus extension. So if you file for extension, then you potentially have until 10/15. It's not automatically 10/15 because the key here is the contribution has to be made before you file your taxes. So if you file for an extension and then you file your taxes on June the 1st, you can't wait to contribute until October the 15th. Now, if you file for an extension and you actually don't file your taxes until 10/15, then yeah, potentially you have until 10/15 to make that contribution. But the key here, contribution needs to be made before you file your tax return.
Okay, this question is from Robert. Using my 401k for personal use, notes secured by deed of trust. Is this okay with the California usury law requirements?
There is a number of statements or questions here that make it a bit unclear. Using my 401k for a personal use. Well, you can't use your 401k for a personal use. 401k is a qualified retirement plan. It needs to be invested for your future benefits. So you can't use 401k for the personal use except if you took a participant loan. So if you take a participant loan from the 401k, the loan proceeds can be used for personal use, but the 401k plan itself cannot be used for personal use. So I'm not sure what you mean there. Not secured by deed of trust, yeah, that's common. Many of our clients do private lending, invest in promissory notes. That's fine. As far as the California usury law, that's something that you need to talk to a lawyer. So it depends on a number of factors there. So I'm not able to comment on this without knowing the details.
Okay, next question's from Anastasia. If I want to transfer my solo 401k to a different business, how is that done?
Well, I think the question here, which is pretty common, it happens quite commonly if you change a business or you maybe closed one business, started another business, you don't necessarily transfer the 401k to a different business, but this process is known as the plan amendment. So we can make the change in the 401k. So from one business being the sponsor, the new business or another business can become a sponsor of the 401k plan. So the 401k is actually not moved, but amended. And a new business is now listed as the sponsor of the 401k. Again, process called plan amendment. Pretty straightforward process. Contact us, we'll give you a form to complete, and then our team will take care of the changes.
All right, this question is from Gary. When calculating RMD, do you use the total of funds in the before tax account and the Roth bucket account?
Well, very good question. When calculating the RMD, you got to remember that the Roth, if I'm assuming since you're mentioning buckets, you're referring to the solo 401k. So if you would like to take a RMD from your solo 401k, the Roth bucket is not subject to RMD, so you will not use that in calculation. So you will use the pre-tax bucket to make the calculation. Now you got to remember that the solo 401k RMD is calculated separately from an IRA. So if you do have IRA or multiple IRAs, those IRAs can be pulled together. You can combine multiple IRAs to make the calculation, and then you can take RMD from just a single IRA to satisfy the RMD. But if you have a 401k, the RMD must be calculated just for that 401k only. So you cannot factor in any IRAs that you have. But in your case, it's pre-tax only. Those are subject to RMD, not the Roth.
Right, we do just have a few more questions left for the pre-submitted questions. So if there are additional ones, please use this time to type them up in the chat so we can answer them. But this question is from Donald. What are the costs involved?
Well, Donald, will be helpful if you specify the cost for what. Now, I'm assuming you're asking about maybe a cost of setting up and maintaining a self-directed retirement account. So again, it depends what route you wish to go. There's a few different options there. There's a self-directed solo 401k. There is a self-directed checkbook IRA, and then we can the checkbook IRA. There is IRA LLC or IRA trust. So it depends on which route you're going to go. But so that will different. There is difference in the setup cost depending on which vehicle you're going to go with. But as far as the maintenance, that is pretty straightforward. You pay one nominal fee annually to maintain your IRA or solo 401k. Now, in case of an IRA LLC, there is also maybe additional cost that is paid to the state, depending on what state you have the LLC. In some states, such as California, have pretty high state fees, $800 a year. So a lot of our clients in California, they actually go the trust route. And some other states don't have any fee or have just a nominal fee, around $100. So again, it depends on the type of retirement accounts, Donald. So the best thing for you will be to contact our office and schedule one-on-one consultation with one of our experts who can take the time to learn about your situation and then uh, give you some guidance specifically for you that's best for you. So do that, reach out to us.
Okay, a question from Edward. How to make money with my self-directed retirement account?
Well, good question, Edward. How to make money? Well, you want to invest your proceeds in your self-directed IRA or 401k. You want to make those investments, and then investments will make money. How? Well, this is a self-directed. So we're not going to tell you how to invest your money. We can give you general guidance, but it's something that you direct yourself. That's why it's a self-directed retirement account. But you invest. You can buy a piece of investment property. You can invest in a promissory note. You can invest in a private business. You can buy traditional investments, stocks and mutual funds. They pay dividend. They go up in value. You can lend the money out and receive interest. The list is virtually unlimited, but you got to put your money to work. Obviously, you don't want to be sitting on cash, and you want to invest in something that you know and understand. That's the beauty of this. There's unlimited options out there, but you don't have to invest them all. Invest in something that you understand and perhaps you've done personally. And a lot of people come to us because they have been investing in real estate personally. They've done well. They're looking at the balances in their IRAs and 401ks, and they're not appreciating the roller coaster of a stock market. And so they say, hey, I want to replicate what I'm doing personally. I've done well in real estate. I want to do the same thing with my retirement account, and you certainly can. But it's totally up to you how you invest. So you gotta probably invest some time and learning about investing if you don't have any experience. And there's certainly resources out there that can help you.
Okay, and last question here is from Mar. What is the role of the custodian if I'm the administrator of my solo 401k plan? Do I need it?
Uh, Mar, if you do have a self-directed solo 401k plan, there is no custodian. The custodian is required for an IRA, but with the solo 401k, there is no custodian. And yes, you are the plan administrator, so you direct all the investments, you control that. But what you do need is you need the plan document provider. That is what our role is. We provide the plan documents, and we are required by the IRS to keep them updated, make sure that you're in compliance. So we responsible for the annual sponsor reporting. We are almost gearing up for that. That's going to take place in January. And we also provide the support for our clients. Yeah, there is no custodian with the solo 401k because with the self-directed solo 401k plans, there can be a custodian, but not in our case because it's set up as a trust. You're the trustee and the administrator, so funds are under your control, and we don't have any access to your funds. They don't go to us or through us. We maintain the plan documents. You need the plan documents to have the plan, and we provide you with the support. But good question.
All right, we do have a question here in the chat from Ed, and he says, I am between 62 and 67 and cannot have earned income more than 20K. Have you seen people use solo 401k to keep earnings below the amount that penalizes the Social Security benefits?
Good question. I don't think I've seen that. Again, you certainly can have a solo 401k plan and just have a nominal business or self-employment activity with it. If there is a reason for you to keep your business income below 20,000, you can. Um, I, um, I've seen people that do, certain things on the side. Maybe they have a full-time job and they just doing maybe some driving for Uber or Lyft and earning $5,000, $10,000. You can do that. So again, 20,000. That's a decent side income. Certainly, I don't see any problems with you staying under that threshold and maintaining your solo 401k plan.
All right, looks like that was the last question, so we will wrap up our session. Thank you everyone for joining us. We did recently start hosting these sessions twice a month, so our next session is on Monday, December 15th. We are looking forward to you joining us then. If you have any questions in the meantime, feel free to reach out to our office. We can always schedule a call with one of our experts. You can call or email us, and we can do that for you.
So Natalie, thanks for hosting this, and thank you all for joining. Always fun answering your questions, and yes, we'll see you next time in 2 weeks.